Hi, Kurt Wannebo, San Diego Real Estate and Investments. One of the questions that I do get from consumers quite often is, what type of information does the bank have through the short sale process to be able to determine how much money I have or what my net worth is, etc. So it's important for me to explain to clients how this particularly works. First thing, you have to understand that if you're engaged in the short sale process, one of the things that the banks can do is that they can pull your credit. Typically, you sign off on your loan documents that they're allowed to do this. And when they can pull your credit, what your credit report is going to show is other debts. Okay, it's not going to show bank accounts or what's in them. But for example, if you do have multiple properties, it will show, maybe with loans on them, it'll show those loans on there, and the bank may be able to determine that you own other properties and evaluate those properties to see if there's any equity in them. Okay. But again, it's not going to show any checking or banking accounts or money that's in them. The second thing that banks can use to determine what you have or what assets you have is any information that you provide to them. Now, understand, in the short sale process, you will be filling out a tremendous amount of paperwork, and you're going to be asked to supply things such as bank statements. So if you provide them with these bank statements, they're going to see what's in there. If you provide them with tax returns, it may show on your tax returns any assets that you have, income property, 401ks, stocks, anything that you're receiving dividends on, etc. And then also in the paperwork, many times there's what's called a financial worksheet that the bank provides, at which place you're going to go through and list and itemize all of your assets and all of your debts. So that is the second way that banks are going to be able to determine what it is that you have. The third thing is, if you are banking, for example, with the same bank that you are dealing with on your short sale that is servicing it. So for example, you bank with Chase, and at the same time we're doing a short sale with the servicer of Chase, it's going to be very easy for them to look into your account and to see what is in those particular accounts and how much money you have. They don't, however, have the ability, for example, if we're working with Chase, to go into any other bank account such as Bank of America or maybe a small credit union and determine what money is in there and what assets that are in there. You have to provide that information to them. So again, to recap very quickly, the three ways that banks can determine what you have and what assets you have are: one, they can pull your credit, which is typically only going to show other debts. Secondly, any information that you provide to them with the paperwork, such as bank statements, tax returns, financial worksheet. And third, if you do bank with the same servicer, many times they can very easily and quickly look into those accounts. Thank you very much for watching this. I'm Short Sale Kurt, San Diego Real Estate and Investments.